Odysseyers! Mike Martins here with the Mike Martins channel. Welcome to Odyssey, folks. Get over to Odyssey. If you're still on YouTube, then you're nowhere. You're not getting the information you need because you're not allowed to say it on YouTube. Anyways, what am I talking about? Well, today it's very important. I was on a talk show a few months back where I got destroyed when I told them that they're going to have to raise interest rates. They have no choice. How are they going to hedge against inflation? How are they going to drop off the bad debt? Or burn off the bad fat? What do they think they're going to do? They're going to keep this Frankenstein monster going as long as it, Frankenstein monster that we talked about on this other channel that's Strike Down? Well, here goes. It's from our folks over at Better Dwelling. The Bank of Canada will raise interest rates early, can hit 11 times the current rate. Woo! Yeah, there it is, folks. This is what we've been talking about since 2010. Canada's oldest bank is accelerating its forecast schedule for the central bank. BMO sees the first interest rate hike in April after yesterday's announcement from the Bank of Canada, BOC, that would be 3 months sooner than previously forecasted. And the first hike is just the beginning. The forecast shows that the overnight rate is rising as much as 11 times its current level to cool inflation. Thank you. Thank you, Better Dwelling. Thank you very much. Yeah, because I was told that if you clip all your toenails from 2-3 different people, toenails, put them in a jar, that's my IQ right there. That's what I was told. But I keep saying, this is not working right. Here I am banging my head every day on this thing, getting my channel shut down. With a video with no audio on it. With no audio. Okay? That's how bad it's getting because it's going to hit the fan and people are going to get the word out. BMO sees the Bank of Canada hiking rates 3 months early. BMO sees Bank of Canada hiking interest rates sooner than previously expected. Now they expect the first rate hike to appear in April, 3 months ahead of schedule. April is also the first month the Bank of Canada said they could raise the overnight rate. So they're doing it in conjunction with each other, right? They usually do that. That's how it's done, usually, uniformly. But you know what? Don't be surprised if they break that and go earlier because inflation's getting out of hand. Yeah. Or unless the government start taxing us even more money so that they could start balancing the books. Governments are taxing more, but it doesn't matter. Let's get back to what we're doing here, okay? So, historically, growth rate, that'll increase by 0.25 basis points, increments often called full hike. It consists with the BLC rates executed in 2010 and 2017, if you guys remember this. Remember this one? 2017, when they did this rate hike, we were doing trends in the housing market, and people were oh my God, I can't afford my mortgage anymore from that much of a basis point hike. Episode's still on the main channel. Once they get started, the hikes are forecasted to continue for the next few years. Canadian interest rates could rise as high as 2.75%. So we know why they had to raise the lower interest rates historically, create this Frankenstein monster. They wanted us to compete with foreign investors, foreign money, laundered money from China. The locals couldn't keep up with it. I told people 5 years ago, and I said, get the hell out of the cities. I got out of the city. I'm in a small town where I'm hated, and that's completely normal. But I'm in a small town of 7,000 people, and it's great. BMO sees central bank moving sooner. Oh, wow. I didn't pre-read this, guys. I just read the headline. But they don't see subsequent hikes occurring very quickly. The forecast shows that the overnight rate hitting 1.25% by the end of next year. That itself will make a 400% above current levels. One of the significant issues with low rates is that an increase tends to seem dramatic and have subsequent impact. Going from free money to paying a little bit. A little is a big step. Ultimately, the forecast shows Canada's overnight rate can go a lot higher. This cycle, BMO sees it's peaking between 1.75% to 2.75% percentage points. That is beyond the next year's forecast though. So you have a few months before needing to worry about it. Let's see how the initial rate hikes play out first. So guys, solution time. If you're on a variable rate mortgage right now, get the hell off it now. Get into a fixed rate now while rates are manageable. Oh, variable rate. Oh, I'm getting low rate. Yeah, you watch out. Go on fixed rate. Maybe pay a little more, but close it off for 5. Could get a 5 or a 7 year term. Amortization would be 300-400 months, but do a 7 year term closed with a 400 whatever it is now. I don't even know, or infinity term, right? But get it, you know what I'm saying? Get it locked 7 years or 5 if you can, if your bank allows you. In the States, they call them ARMs. Get a 3 or 5 or 7 year ARM, whatever you're used to saying. But so the bank's deputy chief economist also points to a few other boiling point issues: high home prices, supply bottlenecks, government spending, and inflation, to name a few. The Bank of Canada won't be raising rates because the economy is booming. Most likely, this is due to overly easy policy, which doesn't justify the need for such cheap credits. Yep. In contrast to other forecasts, Bank of Montreal isn't the most aggressive, but far from the least optimistic. The National Bank of Canada, NBC, recently said rate hikes is needed in the first quarter to avoid jeopardizing the recovery. Desjardins only sees the overnight rate climbing 0.75% by the end of next year. Scotiabank has forecast rate hikes the second half next year, a little later, but still ends the year at the same level. In many cases, it's hard to find an institution that doesn't see interest rates rising by the end of next year. So I was on a little talk show there while I was destroyed when I kept saying that they're going to have to raise rates. They have to. No, they're not going to be doing that. They won't do that to people. Of course. If they're going to do it to anyone, they'll do it to the people. Look what they've done to the people in the last 2 years. Oh, well, it doesn't work. We're going to have to make a new one. Oh, it's going to be a new regiment. You know what I'm talking about. A new regiment. You know what I'm talking about. Anyways, guys, get over to Odyssey if you actually want to watch. All my stuff is on there. All the Mike of the Nights with audio are on there. Turning on my Italian lamp here. Getting everything. Everything's on Odyssey now. The main YouTube channel again got struck down for got a strike for the 9th time for a video with no audio. So that's it right there, guys. In a nutshell, I wanted to throw that out there. Interest rates will be going up. Let me get this for my thimble here. There we go. Thanks so much, guys. God bless. We'll talk soon. I'll see you guys on the flip side. Mike Martins here. I have spoken.